Hello and welcome, as it is day number 21 and month number 2 and year number 2018. This video is going to take a look at Dash crossed against Litecoin, which will be data from early of last year to current, basically the last 350 or so days of data using Bitcoin as a third party. You can trade Dash against Litecoin. I don't know where there is an exchange of the two. But if you're buying Dash, then you buy it for Bitcoin, then you take that Bitcoin and you, well, basically, if you're buying Dash, you need to sell your Litecoin to Bitcoin so that you can buy the Dash with your Bitcoin and vice versa. In this video, we'll focus on the technical analysis on the numbers game, then the charts, because why do you need charts to do technical analysis? Well, when I say why do you need it, I'm not saying why it works, because it does. I'm saying why does it have to be required, because it doesn't. I'm using my strategy where I buy on the dips and sell on the peaks, or buy low and sell high. So obviously, as far as never getting involved when the price is down, well, that's not me. If the price is at all-time lows, I'm buying. If it's at all-time highs, I'm selling. About a year ago, it took about 11 Litecoins to get one Dash. Price action, this is the 18 average on column C. So price is column B, 18 average is column C. Price action at the time was about $1 above it, barely above it. So it would have been near the 18 average of highs at the time. So in an uptrend, the movement's obviously increased. So when price goes from 10 to 26, it's not a matter if you sold, but how many times you sold, at what key levels, and at what prices you plan on buying them back at. And as we can see, your plan to buy back gets executed shortly and quickly thereafter that. For if you are wondering in here when the price was in the 20s, do I buy, do I buy? If you said yes, well, I guess you bought even more. And if you waited, well, you got cheaper prices. But the prices would even become cheaper. They fall to 4. So after having a large onslaught of sales, now you're getting a large onslaught of buys. That's what the whole game is about. Sell 100 and then maybe buy 120 back, or whichever way you do it, you profit on this play when successful. Price action dips below to the 3s, 2s, more buying. And we continue on forward. If you're buying in the 2s and price action makes it in the 5s, that's selling. And if you didn't sell there at the 5s, it's 6 here, about 100 days through. Price action falls down below 4, so selling at 6, buying at 4, that's profit. And then it does nothing for a while. Okay, so you don't trade. You check it every day. Okay, nothing going on. Let's do something else. How's my tractor doing, or whatever else is in your life? Okay, great. And when something is going on, you spend 10 minutes, 15 minutes to do what you have to do. Maybe you move funds from your hardware wallet to the exchanges, make the trades, move it back. Your day is done when you do make trades. But you notice on these days, price action goes up. So on this day, maybe you see it go up to 768. You're like, oh, I guess I should be selling now. Okay, so I'll move my Dash to, say, an exchange. I move whatever amount I want to sell with. I sell it. And then I go to buy the Litecoin, and I move that back to the exchange, and I go back to my tractor. Oh, the price goes down. Okay, let's take that Litecoin, move it over to the exchange. Okay, let's sell it. Okay, let's buy the Dash, move it back. Okay, back to the tractor. And I won't use that reference anymore, but you get my point. That you see it, action tells you to do something, you do it, and then you move on when it's done. And then, of course, you get all the periods where not much goes on, you don't do anything, but there's a selling opportunity here at 7. You can buy this back here. You could wait for cheaper prices. If you did wait for cheaper prices, well, here's a sell opportunity at 850. And if you didn't wait and you bought, well, there's your sell order. And then the prices go back down, so you buy. Do you want to sell here? I mean, you could. You're not getting the greatest of deals compared to before. If you're looking for 60, 70% gains, you'll wait. And if you're doing a bunch of 30, 40% gains, you get a little bit of sales, but not much compared to before. And then it just stays around 4, so now you do nothing as far as trading. You check the prices. Oh, now it's barely in the 3s. Maybe you don't buy. But now it's below 3. Do you take it now? Maybe you buy a little bit. And that's where we stand today. The price is 3.2265. You need a little under 3 1/3 Litecoin for one dash. Let's take a look at this on a chart. We're going to use a line chart on linear scale. And within such, again, when you're well above the 18, selling spots, buying spots. You can sell up here, buy down here, all that stuff. But when I look at this chart, what came to mind to me first was number 1. I want to take a look at this again, but remove the first 30 or so days. So I'm just looking at a scale at like under 10 or around 10, which I've got one of those ready. Number 2, you have this big move that goes from like 27 down to like what we've seen at around 3. So therefore, here's a spot where it bottomed. It managed to stabilize, go sideways with a small bullish trend, making some nice higher highs, and an uptrend this low, this low, this low, this low. And then it fails after this high, going back to previous low. Okay, so I see resistance here where support was after this move. I see this current level starting to roll over. That's a very bearish sign. I also see how with Fibonacci downside, I take a low from a down move. I take a price correction lower high, which is this. High divided by low to the root of negative 0.61803398, but you don't need to know all those extra numbers, and 0.618 will work. 0.62 will work fine enough anyway, but anyway, that's what I would be considering where the down target would be, because you're doing the old technical indicator on before a new leg move is happening. You're resisting a key area, in this case what major support would be, and then you're showing signs on the breakdown thereafter. So let's take a look at this chart again, but eliminate the first 20 or 30 days. And here we stand. I'm just going to change the scaling just a little bit, although it looks good as it is. But I'm going to scale it to 10 at the max instead of 12. And I'm going to do 2 at the minimum as well. And I'm going to keep it linear scale. Okay. So in this point here, we can see how within these moves you got key high, key low, key high. Then within this key high and this key low, you have up and down moves, high, low, high, low. On the down move, you got this key low. Then you got a key high, and just different points, making the moves where if you play this on the short-term level, you're able to get decent profits. We also seen a nice uptrend line from row 27, basically going on through over 200. And this big move down, when Litecoin had a spectacular rally in December, totally broke that trend. After this large capitulation down move, we can see more of this sideways consolidation, which did so within the 18 average. I don't have the 18 average of lows or lows and highs on here, but you know what it's doing. It's resisting the 18 highs, it's supporting the 18 lows. That's where the battlegrounds are being decided, and obviously Litecoin is prevailing within such. So if you're ever deciding, oh, what should I get into between Litecoin and Dash? If you're looking at this, the answer is most clearly, based on the charts, that of Litecoin. So as far as Fibonacci is concerned, based on this low and this high, and remember that the numbers that I use, well, I used, let me just get my I use 2.5 and I use 900. There's a good chance that the low was lower than 2.5, and there's a good chance the high was higher than 9, which would thus make the down target even lower than 113. So therefore, it's safe to say, knowing that it pierces extra, that it would probably pierce to 1. But realizing that these intraday moves probably might have seen something like a 225 bottom or something here. And this could have very easily gotten past 10 on an intraday level, that we could be looking at numbers at around 0.6, 0.75, or notice that the price of Litecoin is 20, 25, 30% higher than that of Dash, because the chart patterns do not state anything bullish. Now, what I like about crossing coins like this together is it's not very common that the vast majority of Litecoin and Dash holders trade against each other. This is merely one number divided by another number, and you are mathematically within those equations are able to trade upon such, and thus increase your cryptocurrency bankrolls within these movements. What I like about this in comparison to codes against the dollar and even a little bit against Bitcoin, quite a bit actually, is that you're going to get a lot more higher probability of having choppy action. And in this strategy, that's exactly what you're looking for. For all these choppy up moves from number 27 all the way up to 248, meant, okay, sell here, buy here, sell up here, buy down there, sell up here, buy down there, sell up here, and maybe you buy in here. But that's what I also want to talk about too, is when you have a situation where price action goes well above the 18 average of close, probably well above the Bollinger Bands and all those upper limits that you may have, then now you can make a case for buying like not below the 18 average of closes, maybe in the 18 average of highs even, which means that after a move here, you're able to take advantage of, well, if you're selling at 8 and you see it down to 6, if that's where you want to go, then you're able to get another sale play. So that's obviously good information worth noting as well. And then what you want to profit, maybe you just want to only try to get as many Litecoin as you can by doing this mechanism. Maybe you want to try to make as many Dash as you can within this mechanism, or make a little bit of both. Because you can start a game like this with, say, 100 of one coin and maybe 60 of another. And next thing you know, you just keep on trading this back and forth. And maybe a year later, instead of having 160 of the other, maybe you could have like 200 and 120 of the other because of successful trades. This type of movements, and if you want to look back at just when you look at stuff like currencies, like just random stuff like the yen and the dollar and the Australian dollar and this and that, you can see a lot of how the choppy action can work well when you trade below the 18 and well above it. Now in the Forex market, the percentage moves are so not worth doing from my book, where these ones are. So thank you for tuning in and have yourself a magnificent day. Bye-bye.